Welcome to Prepare a Statement of Cash Flows, Part 2. By the end of this ACLET, you should be able to prepare the reconciliation of net income to cash flows from operating activities section of the Statement of Cash Flows. This ACLET is a continuation of Prepare a Statement of Cash Flows, Part 1. In Part 1, we prepared all but the final section of the Direct Method Statement of Cash Flows for Bradford, Inc. for the year ended December 31st, 2016. The last section of the Statement of Cash Flows is called the Reconciliation of Net Income to Cash Flows from Operating Activities. Given the name of this section, you should be able to figure out the first and last lines of the section. The first line will be net income, and the last line will be net cash from operating activities. Before we start filling in the pieces of the reconciliation, you should understand why FASB included the section. We will set our statement of cash flows aside for a bit and use a separate working paper for some notes and calculations. Then we'll come back to our financial statement and complete it. FASB recognized that some users of financial statements tend to think that net income and cash flows from operating activities should be equal. And except for 3 circumstances, they will be equal. The first circumstance is accrual accounting. Remember the revenue recognition principle: when you earn, record the earnings, and the matching principle: when you incur an expense, record it, regardless of when cash changes hands. Following these rules results in accrual accounting, which is generally a good thing, but the actual cash flows are important too. So the reconciliation of net income to cash flows from operating activities provides a bridge from accrual basis accounting to cash basis. The reconciliation shows the differences between the two bases. The second circumstance that causes net income and cash flows from operating activities to be different is something called a non-cash expense. In simple terms, a non-cash expense is an expense that is not paid with cash. A common example is depreciation expense. Think about the journal entry you use when you record depreciation expense. Depreciation expense is increased, so the account is on the left side of the entry. And what account was always on the right side of the entry? Accumulated depreciation, the contra asset account used to indirectly decrease the asset itself. Cash will never be on the right side of this entry. Depreciation expense will never be paid with cash. Amortization expense is also a non-cash expense. The third circumstance that causes differences between net income and cash flows from operating activities is gains and losses. Think about the sale of a piece of equipment. The gain or loss on the sale will be included in net income, but will the cash received be in cash flows from operating activities? No, it will be in the investing section, so gains and losses will be reconciling items. Now we are ready to prepare a working paper to calculate and organize the pieces of the reconciliation of net income to cash flows from operating activities for Bradford, Inc. Let's start with the adjustments to net income to eliminate the effects of accrual accounting. We need to find all of Bradford's non-cash, current, operating assets and liabilities. In this context, non-cash just means that we won't include the cash account in our list. Current means what it always has in an accounting context: assets that are expected to generate cash within 1 year and prepaid expenses, and liabilities that are expected to be paid with cash within 1 year and unearned revenues. Operating means that cash received or paid related to the asset or liability would be included in the operating activity section of the statement of cash flows. Assets and liabilities are listed on which financial statement? The balance sheet. The first asset is cash, but we already know that we will not use cash in our work paper since we need non-cash assets. The next asset is accounts receivable. Is accounts receivable a current asset? Yes. Is accounts receivable an operating asset? Well, would cash received from accounts receivable be included in the operating activity section of the statement of cash flows? Yes, cash received from customers. Since accounts receivable is a current operating asset, We'll enter it in the Assets section of our work paper. Then we'll enter the ending and beginning balances. The next asset is merchandise inventory. Is merchandise inventory a current asset? Yes. Is merchandise inventory an operating asset? Would cash paid for merchandise inventory be included in the operating activity section of the statement of cash flows? Yes. Merchandise inventory is a current operating asset, so we'll enter it in our work paper along with its ending and beginning balances. The next asset is vehicle. Is vehicle a current asset? No. You would generally expect to use a vehicle for more than 1 year before selling it, so we will not include vehicle or its contra account accumulated depreciation in our work paper. Now let's look at the liabilities. The first liability is accounts payable. Is accounts payable a current liability? Yes. Is accounts payable an operating liability? Would cash paid for accounts payable be included in the operating activity section of the statement of cash flows? Yes. Whether the accounts payable are for inventory purchases or utilities or advertising, the cash payments will all end up in the operating section. So we'll enter accounts payable in our work paper in the liability section and enter the ending and beginning balances. The next liability is dividends payable. Is this a current liability? Yes. When a board of directors declares a dividend, the payment date is typically no more than a month or 2 away. Is dividends payable an operating liability? Does cash paid for dividends get reported in the operating activity section of the statement of cash flows? No. Since cash paid out in dividends goes to Bradford Inc.'s own stockholders, cash dividends paid is included in the financing activity section. So we will not enter dividends payable in our work paper. The next liability is income taxes payable. Is this a current liability? Yes. Is income taxes payable an operating liability? Yes, because cash paid for income taxes will be included in the operating activity section of the statement of cash flows. We'll enter income taxes payable in the liability section of our work paper, along with the ending and beginning balances. The only remaining liability is long-term note payable. You can tell from its name that this is not a current liability, so we will not enter it in our work paper. Now that we have identified all of Bradford's non-cash current operating assets and liabilities, it's time to do some arithmetic. For each account listed in our work paper, we need to know the amount of the change in the account balance, so we'll subtract. Notice that our work paper has one column just for the amount of change and a whole separate column to show whether the balance increased or decreased during the accounting period. We will always enter the amount of the change as a positive number, the absolute value. For accounts receivable then, the difference between $119,000 and $72,000 is $47,000. This is the amount of the change in accounts receivable. Did accounts receivable increase or decrease during 2016? Since it started 2016 with a balance of $119,000 and ended the year with a balance of $72,000, accounts receivable decreased. We'll talk about the last column in our work paper in a minute. The amount of change for merchandise inventory is the difference between $130,000 and $126,000, or $4,000. Did the account increase or decrease during 2016? It increased. The balance started at $126,000 and ended at $130,000. Use the pause button and calculate the amount of change for each liability account listed in our work paper, then determine whether the change was an increase or decrease. The next step, the last column, is fairly easy to do mechanically, but you'll need to refer to another resource for the why. When you are ready to complete the last column of the work paper, start with the liability section. In this section, if the change was an increase, you'll enter the word add, and if the change was a decrease, you'll enter the word deduct. Not so bad, right? Now move to the asset section of our work paper and do just the opposite. If the change was an increase, you'll enter the word deduct. And if the change was a decrease, you'll enter the word add. Again, explaining why this little system works to convert accrual accounting to cash basis accounting is beyond where we have time to go in this ACLIT. Now we are ready to identify any non-cash expenses that Bradford incurred during 2016. Expenses are found on which financial statement? The income statement. Do you see any non-cash expenses? Typically depreciation expense or amortization expense. Yes, Bradford had $6,000 of depreciation expense for the year, so we'll enter it in our work paper. Notice that the work paper tells you that you will add non-cash expenses in the reconciliation. This is because we are trying to move from net income, which has been reduced by depreciation expense, to cash flows which have not been reduced for depreciation expense. So we have to add non-cash expenses. And finally, we need to see if Bradford had any gains or losses in 2016. In which statement will gains and losses be found? Since gains are just a special type of revenue and losses are a special type of expense, look on the income statement. During 2016, Bradford had a $3,000 gain on sale of vehicle. We'll enter this in our work paper. Notice that the work paper tells you that you will be adding losses and deducting gains in the reconciliation. Again, remember that we're trying to move from net income, which has been increased by the gain, to cash flows from operating activities, which has not been increased by the gain, so we have to subtract the gain. The hard work is done. Now it's just a matter of popping the pieces into the reconciliation section of the statement of cash flows. We've already entered the first line in the reconciliation section, net income. Where do we go for the dollar amount? The income statement, bottom line. Then we'll enter the pieces from step 1 in our work paper. Note the way that these pieces are typically worded. Add, decrease, in accounts receivable, $47,000. And since we're adding, we'll enter the amount of the change as a positive number. Then deduct increase in merchandise inventory, $4,000. This time, since we are deducting, we will enter the amount of the change as a negative number. Then deduct decrease in accounts payable, $74,700. Again, since we are deducting, enter the amount of the change as a negative number. And finally, add increase in income taxes payable, $1,000. Enter the amount of the change as a positive number since we're adding. Next comes the non-cash expense. Remember, you will add these. So in our reconciliation, this item will be add depreciation expense, $6,000. And the amount will be entered as a positive number. The last reconciling item on our work paper is the gain on sale of vehicle, $3,000. Remember, you will add losses and deduct gains. So deduct gain on sale of vehicle and enter the amount as a negative number since we are deducting. The last line of the reconciliation is already in place. Net cash flows from operating activities, except for the amount. So do the math down the column. Remember to subtract the negative amounts. You should get negative 16,000. Now keep your fingers crossed and look to see if this is the same as the amount reported above as net cash flows from operating activities. It is. You've just completed the statement of cash flows. This concludes the ACLIT Prepare a Statement of Cash Flows, Part 2.